Thank you, Jessica. And I think before we get started with this conversation, I think we should give a round of applause to Jessica and the entire team here at Beaver Creek for a great week here.
Can I just say one thing?
What's that?
I just want to say one thing. I hate to complain, and I don't want to sound like Trump, but I think Rick Rule's crowd was bigger the other day. I'm a little upset about that.
Flattery will get you everywhere.
Yeah. So I guess for the first theme of this conversation, I'd love to start with, we're living in a very polarized period right now, and we're 2 months away from a U.S. election. And someone that Frank has really highlighted through his writing and on social media is RFK Jr. And he's really talked about certain topics and themes such as the military-industrial complex, big pharma, the incompetence of the Federal Reserve, that seems to kind of fizzle away in the Western media and doesn't really get addressed. Frank, my question to you is, with all this polarization that's going on in the world and specifically in America, what's your read on the current political landscape?
Yeah, well, first of all, I'm not impressed with either of the two major parties. I think they're both leading the U.S. to oblivion. They're not addressing the issues that need to be addressed. They're focused on all sorts of cultural and woke, issues that don't really matter at the end of the day. And as you mentioned, RFK Jr., whatever you think about him, I mean, listen, he's not a perfect human being, but at the very least, he had a platform that addressed about 5 topics that are the real topics that neither the Democrats nor the Republicans are addressing. And as you said, I mean, it really talks about the spiraling debt, the money printing machine, the military-industrial complex and its impact on foreign policy, and the endless wars that it creates. He's got a great speech about how the Ukraine war really started and the reasons it started, which doesn't get expressed in the mainstream media. He talks about the chronic disease of the American public, the poisoning of the food system. I just wrote an article, which will be published next Tuesday, about that very subject. And when you look at what the Democrats and the Republicans talk about, they don't mention that, and neither does the mainstream media. The mainstream media, to me, is just a tool for manufacturing consent. And the mainstream media will only address issues within certain boundaries. And those boundaries are created by very powerful institutions, the system, whatever you want to call it, that control the media because it's an ad-driven industry. And the perfect proof of that is if you look at all of the recent mainstream media celebrities that have left and created their own platforms, Tucker Carlson, Megyn Kelly, Chris Cuomo, Mehdi Hassan, and they came from Fox, MSNBC, and CNN. And when they were at those mainstream platforms, they would not tackle the topics that they are now talking about, and they're talking about quite forcefully. I was never a fan of Tucker Carlson. I thought he was a joke. And now I've been watching some of the subject. I don't agree with everything he says, but he really talks about the dangerous approach that America's taking to its worldview and the endless wars that it creates, and that it's bankrupting America. And I've been writing about this stuff for 25 years. I started predicting this stuff very early on, and here we are today. And I think we're headed to a financial abyss. And so, again, I think that you've got a media and a political system that really that doesn't address what needs to be addressed. And now RFK may have had the right message. He might have been the wrong messenger. And now he's back in Trump, and obviously I think he's been promised some sort of to become a food czar or a health czar, which is fine as long as, if Trump does win and if they keep their promise, that might do some good. But it's certainly, the system will not allow for the kind of changes that RFK was really addressing. And I'm really sad that he abandoned his campaign.
Yeah. And moving to the next subject is to follow that and that polarization is with essentially the American empire, and I know, Frank, you are a student of history, and we've seen the British, the Spanish, the Roman empires. Ray Dalio touches on it extensively in terms of the long-term debt cycle, typically ranging 50 to 75 years. In terms of your perspective in where we are in the cycle and comparing where we are in terms of the American hegemony versus other kind of empires throughout history, if you could, with your kind of knowledge and readings on that, if there's any parallels.
Plenty. And, Ray Dalio did a great job in his book, The Changing World Order. If you've read it, if you haven't read it, read it. It's, he takes 5 different global powers throughout the last 500 years, 5 or 6, and he maps out their rise and fall and the reasons for the rise and fall. And, and I think he did a great job. But he wasn't the first. Listen, and with all due respect to Ray Dalio, lots and lots of people have been. I started writing about this in 2001. And in 2003, I wrote a paper that Doug Casey published for me in those days, which was called The Good, the Bad, and the Ugly. And it was on the eve of the U.S. invasion of Iraq. And because I am a student of history, and I've looked at all the past global powers and the reasons that they fell, and I chose the Spanish Empire because I thought that was a really good analogy for what's happened, what I saw as to America's path. And this was 2003. I'm not Nostradamus by any means, but I do read history books, and that's all you really need to do. You can see all the patterns; they're all in there. So if you take the Spanish Empire, which went from shirt sleeves to shirt sleeves in basically 3 generations, in 130 years, 1532 to about 1660, they were the global power, and because they conquered Latin America, and they conquered the Incas and the Aztecs, and they got all of their gold and silver. So you had all of this gold and silver flowing into the coffers of Spain, which did a number of things. It created inflation and instability in the economic system. It disincentivized production, and it promoted consumption. So all this gold and silver came in, it all flowed out for consumption goods. And then the Spanish thought, well, we're that rich, so maybe our way should be the way of the world. So they had endless wars. They went to war with France, Britain, Portugal, Sweden, the Dutch, the Ottomans. And through the course of 100 years, they spent all their they spent all their gold and silver on consumption and some on wars, and then they had to borrow, and they borrowed mostly from the Habsburgs, and they had multiple defaults in the 17th century, ending with the final default I think was in 1662 to the Habsburgs, and that was the end of their empire. It lasted 130 years, and when you look at the similarities. You look at America, at the end of World War II, America had half the world's GDP and half the world's gold. They were the largest creditor and the largest exporter. That completely flipped. They're the largest consumer in the world, the largest borrower in the world, and they don't export to the extent that they used to 70, 80 years ago. And as a global hegemon, what do? They create endless wars. They try and bend the world to its will. They see that that their way is the way, and they call it the international world order. Which is complete hypocrisy when you look at it, because they start most of the wars. In the last 50 years, America started most of the wars worldwide, and they're bankrupting themselves. They've got so much debt. They're adding $2.5 trillion a year in debt. And there's going to be an end to that. There will be a dollar crisis. It will end. Now, they've got the world's reserve currency, which has saved them thus far, because had they not had that, they would have been bankrupt a long time ago. But that's coming to an end with the de-dollarization, the rise of the BRICS. So there will be a moment in time where they won't default. That's not what's going to happen. They're going to inflate, and it'll be hyperinflation. And that will only happen when the domestic audience loses faith in its own currency. because you're already seeing a de-dollarization movement that's taking place. So I started talking about this 3-4 years ago, and it's accelerating now. They're selling dollars and buying gold. And for those of you in the audience, that is the bottom line. They're selling dollars and they're buying gold. So gold will have its day.
When it's incredible to see, like, even since 2001, we've seen the reserves among central banks go from 71% to 54% today in terms of U.S. dollars in their reserves.
Yeah.
And at the same time, we're starting to see the diversity and the rush into, like, even the first half of this year, record amount of gold buying by central banks. So that leads us to, in terms of the digital kind of transformation technologically with central bank digital currencies, in terms of that, 95% of central banks around the world are exploring, and whether in development or doing research on deployment of central bank digital currencies. And we're seeing, a China-led block, and we recently saw Saudi Arabia come in with Project Enbridge. What's your stance in terms of how central bank digital currencies will play a role in terms of the reset that you've really emphasized over the years?
So first you have to understand the motivation. The motivation is to find a mechanism. Most countries are trying to find a mechanism to operate outside of the US dollar system. And there have been lots and lots of conversations about how that's going to happen. There's been a conversation about a BRICS currency, which I think is possible, but I think it will take quite a bit of time for that to evolve. There is a much simpler, easy approach that is being employed now. You mentioned the Enbridge project. If you haven't heard about this, it's been a pilot program that's been run by China, Thailand, the UAE for the last 3-4 years. And how it basically works is that each of these countries created a central bank digital currency, and they conduct their trade central bank to central bank using only that, and it's completely outside the US dollar system. And now, as you said, Saudi Arabia and others want to join this Enbridge project, and I think that the BRICS will end up, any of the nations, that the 11 now and the ones that are to come, that want to be outside of the US dollar system will use that. And the critics of this, because they're obviously, in the West, you'll see people poo-pooing the idea that this is going to work. They say, well, listen, why would you want to be holding Indian rupees? And if you're, what are you going to do with them if you have a deficit with another country? And the simple solution, and it was actually Jim Rickards who gave me this idea, and basically, I don't know if you've seen this, dozens and dozens of bilateral trade agreements being created between countries using only local currencies. That is the trend at the moment. That is the way that they're trying to stay outside of the US dollar system. And so let's say there are two countries that are trading together. At the end of a period, there's a trade deficit. How do you settle that deficit? So that you don't end up with currency you don't need, that you haven't done in your bilateral trade. You settle it with gold. And that's why I believe you're seeing every central bank outside of the West accumulating gold at an accelerating pace. It's a very simple formula. It's easy to do. It's all Forex transactions will be central bank to central bank, and you pick a period. Do you settle quarterly, every 6 months, annually? But you can settle the deficits in trade with your gold positions. And I think that's where we're heading. And eventually, I think we're going to see a alternate currency that might be a BRICS unit. We'll see. I think that might take a bit longer.
And with obviously the emergence of BRICS, and recently I think it was last week, we saw Turkey express interest into BRICS. And with them being such a commodity-driven heavyweight in terms of an economic bloc, Vladimir Putin said yesterday that he was thinking about potentially starting to limit the exports of different commodities. What's your take on essentially that part of the world starting to leverage their position in commodities to combat the weaponization of the financial system in the West?
Well, first, Turkey is in a tricky situation. They're a member of NATO. They have good relationships with Russia. They want to continue to trade with Russia. And so that's going to be a tricky one if they want to join the BRICS. I'm not sure how that's going to work, but we'll have to see. But if you saw what happened after the invasion of Ukraine by Russia, and when all the sanctions were levied by the West against Russia, with the hopes that those sanctions would bust Russia, that would collapse their economy. They froze their foreign reserves, and they put all these trade sanctions, and then they threatened secondary sanctions with those countries that still wanted to trade with Russia. Well, what happened? Trade with Russia has increased. 100 countries around the world have increased their trade with Russia, not decreased it. And though the U.S. and the West continues to make these threats, they've threatened the UAE, they've threatened Turkey. They won't threaten India because they need India to counter China in the global geopolitical game. But the only people that they're really going after are the poorer, smaller countries because they can't control what these other countries are doing. And the UAE and India are trading like crazy with Russia, using local currencies. And who knows, maybe they're using gold as well. It's hard to tell. But I think that these sanctions have basically created a bifurcation of the global economy. And you're going to have basically the West, the G7, the West, and the BRICS. And then you have the global South that are going to have to pick and choose who they align with. But I think that the BRICS are gaining momentum. The BRICS, by far and large, have most of the commodities in the world, especially oil. And if you think about it, the U.S. has sanctioned countries that represent 40% of global oil reserves, which is nuts. And so, you're going to have a number of battlegrounds now. You're going to have Africa as a battleground. You're going to have Latin America as a battleground. I think Africa is the most unstable location for this geopolitical tug of war for commodities. China for the last 20 years has basically controlled the commodities game in China by building infrastructure and such and investing, trillions of dollars. But now, America is going in there and they're trying to find ways to counter the China initiative. Russia's in there with the Wagner Group. Saudi Arabia's in there, the UAE's in there, Turkey's in there. And I think you've seen probably, 11 military coups in the last 3 years, mostly in the Sahel, the Burkina Fasos, the Chads, the Malis, and Nigers. That instability is all about commodities. Who's going to control the commodities around the world? And I think, as we've seen in the past, when you have commodity wars, they end up, manifesting into hot wars. So I think we're going to have a period of a lot of instability around the world. There are going to be the have and have-nots of commodities. There are going to be alliances created between countries to control commodities. The U.S. is going to do their best to influence the Indonesias and the Vietnams of the world. Russia's doing its best, using the Wagner Group to destabilize certain countries that the West, meaning the U.S. and France, especially in Africa, where they controlled the commodities game there. So I think it's going to be a period of war and instability, and it's all about commodities.
Well, shifting gears just a little bit, one of the things I know we've had a lot of laughs about, and it's not a laughing matter because it's very serious, is essentially the circus going on in Japan. So the Bank of Japan has, essentially turned their, in my view, turned their financial system into a socialized system, and it's essentially a financial welfare addict where the Bank of Japan has bought up the ETFs, the government bonds, and now suddenly they want to raise interest rates, and it blinked. The market had a breakdown. And in addition to that, they are one of the largest holders of U.S. debt.
The largest.
So the largest. And so what's your stance on Japan and in potentially the global impact of what's going on over there?
Well, for those of you that have not watched the Japan situation unfold, it's been a 30-year monetary experiment. And whoever designed it must have been on magic mushrooms because it was destined to fail. You've got basically a scenario, and they were doing this to prevent a deflationary spiral down. And so what they did is they created free money for 30 years. And how do you create free money? You have to print. And I think it's eventually it had to, gravity eventually sets in. You can't play these games forever. And so what happened recently, what you just pointed out, is that they were defending the yen. The yen was starting to collapse. How do you defend it? You have to raise your rates. But what we all should be aware of is that there's this little thing called the carry trade. So for 30 years we have had 30 years of free money that created, according to Deutsche Bank, a $20 trillion global carry trade. What does that mean? It means that people, investors around the world, all sorts of investors around the world, borrow in yen at almost zero cost, and then invest in other assets in other currencies that have a higher return, a higher yield. And that could be anything. It could be bonds, it could be stocks, it could be real estate, and it's global. So if you think about it, that Japan's living in this alternate reality that has to end. You can't play, especially with their demographics. They have a 1.2 fertility rate. That means that in 3 generations they could lose 4/5 of their population. So where's the growth going to come? How are they going to grow their way out of this problem? So eventually the yen will get attacked again, and in order to defend the yen, they have to raise rates, sell dollars to buy yen. They spent $100 billion last year defending the yen. And when you start raising those rates, the carry trade starts to unwind. And that's a global problem. And we don't know, no one can really, like I said, Deutsche Bank thinks it's around $20 trillion. Even if it's $5 trillion, that will unravel a lot of investments that are highly levered around the world. So I think that that's just a disaster that's going to eventually unfold in front of our eyes, and it's going to be scary. And the U.S. is not that far behind. And again, the U.S. has global reserve currency to protect it, but Japan is the largest single holder of U.S. treasuries. What the U.S. won't have is a Japan when it starts to unravel, it's not going to have a Japan there buying its treasuries. The U.S. had Japan, had China for a long time, although China's reduced their treasury holdings by a significant amount over the last few years and increased its gold. So who knows what's going to happen? I don't know how this plays out. But again, as with all these things, they unravel eventually. And when they unravel, it's going to be really, really ugly. And I think fiat currencies, and you're already seeing it. And again, here's the other thing the mistake that most people make. They compare cross-currency rates. So they compare the U.S. dollar to the Japanese yen or the euro or whatever. That tells you nothing. It's just one abstraction compared to another. What gold tells you everything. So let's look at gold. What happens with gold when a currency starts to fail? Argentina was a great example. Gold went up 10, 15-fold in the last 3 years in Argentine peso terms. Turkey went up 10-fold in the last 3 years in Turkish lira terms. Japan, gold has doubled in the last 3 years in Japanese terms. The last man standing, the U.S., and you're starting to see gold perform. It's not that the gold is going up, it's that the U.S. dollar is going down vis-a-vis gold. That's where you need to look at it, because gold is the only real tangible currency that's not somebody else's liability. There's no counterparty risk there. And so that's why the central banks, there are 2 reasons central banks around the world are buying gold. One is because the fear of U.S. sanctions and secondary sanctions, and 2 is the horrible state of the U.S. financial system. There is absolutely, as I said at the beginning of this conversation, there is no attempt by either political party to address the deficits and the debt. They don't even talk about it. They pretend. And what about the unfunded liabilities? Rick was talking about this the other day. $100 trillion of unfunded liabilities. They don't even talk about it. No one wants to address it. It's too scary because there is no solution. They all know they can't, politically, they can't cut the expenses side of the balance sheet because they can't get elected, and raising taxes, you can't get elected. What's left? Inflate your way out of it. And that's what's happening. So that's why they won't talk about it. So I think that the U.S. is nearing a period of time where we'll follow Japan. And I think the whole fiat currency system is going to be very, very troubled. And that's why the smart money is going to precious metals and hard assets in general.
Well, and saying that with that flow and especially from central banks and even private investors now starting to really get involved in the accumulation of gold, what's like in terms of your like in terms of what you're looking for in terms of at this point in the cycle in the mining business, in terms of we're seeing a growing number of M&A deals. The industry in itself, even though gold hit a record high, the industry in itself is still in relatively rough shape in terms of valuations. What's your general feeling with where gold is trading today in terms of how are we going to get more capital back into this space?
Yeah, well, the truth is, and much to my chagrin, I've been wrong. If I was here last year, I might have said it here last year at some other conference where I was asked the question. I said, listen, when I think gold was 1,800 at the time when I spoke about this, I said, when gold breaks through 2,000 and finds a new level and stays there, money's going to come rushing into this sector. And guess what? It hasn't. It hasn't. This is the most incredible disparity that I've seen. I've been doing this for 45 years. I think Rick's been doing this for 55 years. Sorry. And I've never seen anything like this. You've got an incredible disparity. There's no capital coming into this sector. Now, I can think there are probably a bunch of reasons why that is the case. Now, having said that, I think eventually, if gold goes high enough, it will come. Sentiment always changes. I just think it's just blowing my mind that it hasn't happened yet. And I think some of the reasons that I've thought about are, you've got these other sectors that have had tremendous momentum, crypto sector and the tech sector. Now you got AI as the new shiny toy on Wall Street, and the investment community at large. The value investor has disappeared. Warren Buffett's probably still there, but most investors today, the hedge funds especially, are momentum players. So they go into a sector that has momentum. And this sector has shown zero momentum. So that's one reason they've stayed out. This whole ESG fad that's taken place has labeled mining as a dirty business. And so you have a lot of funds that just simply won't invest in mining because it's considered dirty. And they speak from both sides. From one side of the mouth, the mining's dirty, and the other side, we need these critical minerals for the energy transition. Well, you can't have your cake and eat it too. We need these metals. So I think that eventually, as some of these metals get scarcer and scarcer, and as the world fragments more and more into the have and have-nots, and as the tensions rise between the global powers, the BRICS and the West, et cetera, it's going to drive up these commodity prices. And eventually, and I'm not going to make any predictions about when it's going to happen, but eventually money will flow into these stocks. In the meantime, it's a great buyer's market. So if you've got cash, as our little Fiore group has discovered over the last year or so, if you have access to some capital, there's some amazing bargains out there. Things that were trading at hundreds of millions of dollars, you can buy for a couple of $1 million. And the value's still there, it's just nobody cares. We did it with West Red Lake, we did it in Colombia with copper, we just did a silver deal in Argentina. These assets are fantastic assets, and you can buy them for practically nothing. But the problem is you need money to buy them for practically nothing, and very few people have access to money. And that's what Rick Rule said the other day. I noted one of his conditions of writing a check is who's the sponsor. If a junior mining company doesn't have a financial sponsor behind it, they're probably going to run out of money at some point, and then they will dilute, and it'll be a downward spiral. And it's a real problem. I hope it changes soon, because I love the people in our industry, and everybody's been hurting very, very. It's been bad, and I'm not sure how long it's going to last. But I do know for a fact that gold's going a lot higher, silver's going a lot higher. You're going to have a shortage in many of the critical minerals like copper, and that's why I love copper, and that will come into play.
Well, no, I have so many more questions, but I am at the clock here, and I think it's time to open it up for questions. So.
You talk about the currencies, but you haven't mentioned Bitcoin. Do you think that Bitcoin will play a role, or what kind of a role, with the BRICS, who are, and some of the BRICS are really getting involved with Bitcoin?
I'm looking around the room to make sure I'm not going to insult anybody that's a real maxi Bitcoiner. I've spoken a lot about Bitcoin. I debated Michael Saylor 3.5 years ago, who's the big Bitcoin maxi, on gold versus Bitcoin. Listen, you want to buy Bitcoin, buy Bitcoin. The BRICS are not buying Bitcoin. They're buying gold. All the central banks around the world are not buying Bitcoin. They're buying gold. Bitcoin is in my opinion, you may disagree with me, is a speculation asset. It's an asset that's been searching for a purpose since it was introduced. Every purpose that they've promoted fails. It's not a currency. You can't use it as a medium of exchange. As a hedge against market volatility, hasn't really worked. It goes up when the NASDAQ goes up, and it goes down when the NASDAQ goes down. I don't think Bitcoin has a future. I really don't. And I may be wrong, but I'd rather sleep at night. And I'm going to bet my money that I would rather own an asset that all the central banks around the world are buying like crazy, rather than an asset that's now become a retail play. And it's people buy Bitcoin to make money, to make fiat currency. They don't buy Bitcoin because they believe that they're going to store value for their children and their grandchildren. That's not. I know that's how it's promoted, but that's not what it's actually happening. And here's the last thing the real reason I won't buy Bitcoin is because if it gets really ugly out there and we have a US dollar crisis, you have no idea to the extent that governments will go to protect their currency. They will start wars. They will kill you. They will come and, and it's so, and if you own Bitcoin versus gold, it's really simple to shut you down. If you have a US dollar crisis and they declare Bitcoin to be illegal, much like China tried to do, it's really simple. You just shut off the on-ramps and the off-ramps. Now you got a bunch of code in your wallet. What are you going to do with it? It's going to greatly devalue its value because you can't use it for anything. You can't trade it. You have a bunch of wonderful code in your wallet. So I really believe that we're heading towards a dollar crisis. And I think that when and if it happens, and if Bitcoin were to start to move up dramatically, they'll kill it. They'll absolutely destroy it. Now, having said, they might try and steal your gold, as they did in 1933, but they will never destroy it because they own it. The U.S. has, 8,100 tons of gold. You see them selling it? They learned their lesson in the 70s when they were trying to keep the gold price down, and they started to lose a lot of their gold, and they thought, well, this isn't working. Let's figure out another way to dampen the gold. And I know Rick Rula had this, and I had a debate about a year or 2 years ago about whether gold is manipulated. Well, it's a very lively debate. And I took the side that yes, gold is manipulated. He was saying it wasn't, but I think at the end of the day we actually agreed that it.
At the beginning of the day we agreed.
Yeah. So why did you take that side? But the point is that Wall Street, Bernanke, whoever poo-poos gold when they do their speeches, they can poo-poo it all they like, but they own it and they won't sell it. They just don't want you to own it. And that's why it's happening globally now. So buy the asset that they're buying. Don't listen to what they're saying, is my advice.
Thank you, sir.
It's been a while since we gotten to the point where people even begin to worry about the fiscal cliff, and we've been predicting it for a long time because, every year our deficit or debt increases by $2 trillion. It's a lot of zeros. First question is, when do you think that's finally going to matter and we do hit that fiscal cliff? And the second question is, there are so many frigging treasury bonds out there, and the foreigners that say try to sell it, who's going to buy it? Will we get like quantitative easing at an order of magnitude more than what we have right now? Because we're going to want to inflate it away. So somebody has to buy those treasuries. Will it be the Fed?
They will always be the buyer of last resort. When we run out of buyers, when the U.S. runs out of buyers around the world, because now almost every non-Western country is slowly selling their treasuries, including Saudi Arabia, definitely China. They're showing it. When there are no buyers left, including the domestic audience, the Fed is the buyer of the last resort. We saw it, and we're going to see it again in spades. The next go-around of QE is going to make the last go-around look like a garden party, and I truly believe that. So, when it's going to happen? All I know is, I used Hemingway's quote when he was asked, how you go bankrupt. He goes, well, gradually and then suddenly. And it takes one event. But seriously, a crisis is created by an event. What could that event be? It could be anything. It could be another pandemic. It could be a war, a threat of nuclear war, something that is catastrophic in nature that creates a crisis. And I think that will come, and it will happen very suddenly when it happens. Now, they could play this game for another 5 years. I doubt 10 years, maybe 5 years. But when you're adding $2.5 trillion to your debt pile every year, who is buying these treasuries when their people are actually selling them around the world?
What will happen to the dollar when that happens?
Well, the dollar is going to, again, don't measure cross-currency rates. That's a fool's game. Because all fiat currencies are in trouble. Because they've all been printed. Measure it against gold. That's the only measure. Because gold will go through the roof, but it's really that the fiat currencies are collapsing. That's what's actually happening. Rick, sorry.
Frank, Alec, thanks a lot. This has been a great talk. When the Canadian government allowed the big banks to buy the brokerage houses, you saw the disappearance of the retail investor in the junior market. What can we do to bring the retail investor back into the junior market? Because everybody in here is all worried about access to capital, and it's becoming harder and harder to raise money for junior companies, which is the lifeblood of this country.
Yeah, well, you might like or not like part of my answer. You have to make the investors money, okay? And I think that this sector in the past has proven not to do that. Okay, so that's number one. It has a reputation for losing people's money. I think we need a consolidation of this industry. Far too many companies, and most of that money is going to G&A, and I know that's your big issue. It needs to go in the ground. We need to do more for our shareholders. I love his company, Abitibi, because they only spend 16% of your... Great, I just gave you a plug. So that's one answer. The second answer, with respect to Canada, we're in the U.S., but with respect to Canada, where a lot of this activity is taking place, we need different leadership. Canada is could be a global commodity powerhouse. It just has ridiculous leadership. It has policies that just don't work. We need common sense policies. I sound like a politician. We need common sense policies to be able to exploit that wealth in an intelligent way. But really, at the end of the day, if you make investors money, they will like your sector, and we haven't. Okay, that's just the honest truth.
Hi, Frank. I've got a quick question about what the world looks like for Canadians if we're undergoing a major currency crisis, given that we're living in a country where our government, so I guess this is a good segue into my question, our government has been selling off our gold. I don't even know if we have any.
We don't.
And so what does that look like?
I actually wrote an article about this 2 years ago about why Canada has no gold reserves, which they sold, 20-something, almost 23 years ago. And the logic at the time was that gold served no purpose, that the central bank could get a better return on other types of assets, which has proven to be really wrong. And the other part of it is that Canada believes that they're so tied to the U.S. monetary system that whatever happens to the U.S. dollar is going to happen to the Canadian dollar. We're really and we have these swap arrangements with the U.S. so that if we had a currency liquidity crisis, we could tap into those swap lines with the U.S. to protect the Canadian currency. But what they haven't thought about, what Canada's not thought about, what happens if the U.S. starts to crumble, its dollars, currency starts to crumble, then we're screwed with them. And it's as simple as that. And I made a very strong point that Canada should buy gold. Mind you, you might think, well, we have a lot of it. It's in the ground. All we need to do is mine it. But they don't even do a good job at that. So.
Okay, you referred to a discussion, I guess it was, between you and Rick about gold being manipulated. Do you think that silver has been artificially suppressed, the price of silver?
It's funny. I don't follow silver as much as I follow gold. What I do know about silver is this. I know a couple of things about silver. One, I've always wanted to do a silver deal. In my whole life, I've never done one until just a couple of days ago, because they're really primary silver deposits are really hard to find, like really hard to find. But silver, I've been watching this market since I got into this game in 1978. So I've seen a couple of silver markets, I've seen a couple of gold markets, and generally silver will track gold. At a certain point, when you get into a real bull market, it will outperform gold. It's got far more volatility than gold. But it also has all the industrial uses that make it very hard to make price predictions. There are factors. Gold is money and it's jewelry. Silver is many things. It can be used in so many different reasons. Now you've got China and India importing silver in record amounts. We know why China is doing it. They're the largest solar panel manufacturer in the world, and silver is a very important component there. But my only guess is, the only thing that I would suggest is that at some point in this bull market, which is going to happen, you're seeing the beginnings of a precious metals bull market, the rabid, fanatical silver investors will come out of hiding, and they were going to drive silver through the roof because they are fanatics. They're rabid, and you have to love them. It's a part of the population. They don't even look at gold. They just want silver. I think they're still pissed off about the 1880 Coinage Act, where they took silver out of the monetary system. But silver has been around silver has been the global money, the people's money, for a few thousand years. Gold is strategic money. Silver is the people's money. If you think, going back to the Greeks, when they fought the Persians, they needed to acquire silver from their silver mines to, pay for the cost of that war, which they finally beat the Persians on. You've got this, during the 15th, 16th, 17th centuries, the Ming and Qing dynasty used silver as money, and they were the first to create a global trading system. Globalization started after the Spanish conquest of the Americas, and they brought silver into the marketplace. China brought all that silver back to China. They taxed people in silver, and they used it for global trade, and that's how global trade began. It was all done with silver. So I think it's an important metal. I think that it will really perform and outperform when this bull market really gets underway.
Guys, thanks for doing this, Alex, Frank. Real quickly, you touched on it briefly with Argentina. Javier could potentially be a case study. Maybe he's going to be a scapegoat. What are your thoughts right now just on how that's going to impact sort of the relationships between the BRICS and the West? And is he a potential scapegoat, potentially, for maybe a failed political experiment?
So far, he's doing quite well. Okay.
Absolutely.
And listen, I grew up in Argentina. I was in Argentina till I was 9. When we left Argentina, it was because my father saw the writing on the wall. It was 1965, and he saw that the place was falling apart. The sad part is he didn't get his money out in time. And by the time he got his money out, years later, hyperinflation had already set in, and he got zero. He lost everything he owned. So it was a very valuable lesson. Since then, I've watched Argentina time and time again. A new administration comes in, there's hope for change, and it lasts about 3 or 4 years, and then kaboom, the Peronos guys come in and they destroy it again. The current guy, he's quite unique. I really like what he's doing. I think there was a couple of campaign promises that he made, which I think I knew right away were never going to happen. One was that he was going to dollarize the economy. There was no way, if you do the math, it was impossible to dollarize the Argentina. He would have needed $50-60 billion to acquire the dollars necessary. So that I knew was never going to work. Poo-pooing China. Never deal with the communists. All this. And the Chinese are slowly coming back there, and he's welcoming that. So I think basically cutting the bureaucracy, cutting unnecessary costs, is brilliant. Now, whether he can maintain it for long, we'll see. I don't know.
Well, and on that note, I think we are out of time. But thank you, everybody.